So good day, fellow friends. Let's hop over today's chart breakdown. Let's delete all of this because it's just noise, but breaking down this structural thing here is last week just being nothing, capping off a monthly candle, which isn't quite nice, but still we can't do anything about it. Monthly candle closing bearish as predicted. So this will most likely turtle soup this low. That's why I also mark this low as a nice liquidity area here. Okay, and then if we look at the weekly time frames or the weekly candles, we just have bearishness. We have an inside bar candle, which we right now could easily induce and then cap off the week something like this. First week as a range for the monthly candle, ranging around would be quite nice. And then next week, second week, forming the high of the month, the low of the month, and then expansion higher. That's my view. Simple as that. In the weekly time frame, right now, we see nothing. If we hop down into the daily, we simply trade daily time frames and daily CRTs. We get SSMT, sequential smart money traps, or SMT, over a period of time, in this case over a few days, where you see Thursday being an inside bar candle and Friday liquidating this bigger Wednesday inside bar candle, also inside the 50% of this order block. Nicely. We are still bearish, so there's no indication to turn around. There's no daily shift, no 4-hour shift, nothing going on in between here. So there are just swing lows, swing highs, which got broken. This is internally right now, and right now we also broke here lower. The only thing that I could have expected is that the 9 a.m. model wicks higher. In this case, the 9 a.m. model did nothing to potentially come in between here. Right now, what we see, very clean, very nice. What we can see is for the daily time frame, if we stick to this, I mentioned on Friday that I will look for sells, and also if you go to the 15-minute time frame, you have clear CISD, a very clear one. Okay, so you come into this area, come above previous week's high, or yeah, in this case, yeah, previous day's high, also liquidating a whole day inside of it, and then you induce below this low. It's not a nice low, still it's manageable to take some trades. You have IFVGs here. The personal interest why I would have entered is this FVG in between here, and then I protected the overall situation, which is totally fine if you have a daily trade, to then target even Friday's low and partial out at 50%. And right now also this position was running. I just closed it down here, not on this wick but on this wick. After this big push, I closed my position, since we've seen this shift in structure, for a potential reversal into this key area here, and then to push further lower. We may see a liquidity grab right now in between here for a 1 a.m. model, a candle close, and then bearishness to continue lower. The thing is, we completed our cycle in the daily time frame, so we took out a major point of liquidity, which is this low, which is a lower time frame liquidity pool. The only thing that I'm currently looking at is this low and is previous week's high. In this case, this one can be marked out, or even this one, because it's a nice liquidity pool. So for me right now, Tuesday could form the low of the week. Wednesday, in this case, could push higher. And if we look at the fundamental aspects of next week, or like this week, that on Thursday, the previously recorded was 213,000, and there's more unemployment claims, which is not good for the currency. So actual less than forecast is good for the currency, but we expect 2,000 more, which I will expect even more because it's December, the start. A lot of people quit their jobs because of the double payment that they get. So this can be bearish. So we could cap off the week with Thursday already. But for Friday, it's 100% clear bullishness for Dixie and a 1000% bearishness for EU. So as you see in between here, this previously is bad and it gets better. So we have bullishness already. Actual greater than forecast is good for the currency. We have USD news, so this will push markets higher in USD in Dixie and push markets lower in EU. If we look at this right now, 12,000 people previously got a job or were employed in the industry, excluding the farming industry, and right now it's 202,000 people got more, like applied for jobs and got jobs. So it's 180,000 people more or 178,000 people more, which is heavily bullish for USD, which will be demolishing bearish for EU. So we will most likely see a complete breakdown here, lower. Maybe even Tuesday does something like this, which would be unexpected, but we still observe the markets and adapt to the current situation. Today I did not trade. This for me is a range. I wait for this to be broken out of, and then I take simple trades. That's simply it. Enjoy, and we'll be back with another trade breakdown.